If you're building credit from zero, this is the only video you're gonna need. Your credit score is the most important number in your financial life. It sets the interest rate on your car, your house, and the big one for the channel, whether you get approved for the best credit cards or the huge welcome bonuses that come with them. Those thousands of dollars in welcome bonuses we talk about in many of my other videos, almost all of them need good or excellent credit. So your credit score is the gate. No good score, no bonuses. You have to build your credit first. The good news is when you're starting from scratch, your score climbs faster if you do it right. There's a very clear path to building credit, and I'm gonna show you exactly how to do it. So first thing you must know is how FICO and your credit score works. FICO is built from 5 particular things, and each one's worth a different amount. Payment history is the biggest one at 35%. Then credit utilization is 30%. Length of history at 15%. New credit and inquiry at 10%. And credit diversification at 10%. Notice that payment history and credit utilization are almost 2/3 of your entire score. So those two are definitely the most important things, if you can remember anything from this video. Well, let's go through each of them. So payment history, 35%. The rule is simple, never miss a payment. And I really mean it. It's incredibly simple if you follow fundamental ideology. Always set up automatic payments every time you open a new credit card. Make sure you're never spending more than you have in your bank balance that's tied to that automatic payment, which means treating credit cards like debit cards. If you miss just one late payment, it'll stain your credit history for 7 years and your credit score will go down 50 to 100 points. Now that penalty is extremely harsh and seems slightly unfair, but if you're doing exactly what you need to do, which is setting up automatic payments and never overspending how much you actually have in your bank account, then you will never miss a payment. It's by far the easiest thing to manage and maintain in your credit journey, so make sure you don't mess it up. A utilization at 30%. Now, utilization is also fairly easy to kind of conceptualize. It's the percentage that you're using comparatively to the total credit limit amount that you have. So for example, if you have 2 or 3 credit cards, one with a 5,000 limit, one with a 10,000 limit, and another one with a 5,000 limit, that would add up to 20,000 credit limit. Now, if you spend $200 on a purchase with one of those credit cards, that would mean that you have a 1% utilization rate, which is good. But if you spent $2,000 all at once without making a payment in a given billing cycle, this would mean that you have a 10% utilization. Now, you typically do not want to go over 5 or 6%. 10% or higher can affect your credit score negatively. So keep that in mind, which is why it's important to always show that you are a responsible spender to the credit lenders and the banks so they can increase your credit limit, and why it's also important to apply for new credit cards, because new credit cards mean new credit limits. New credit limits can increase the space you have to optimize your credit utilization. The difference could be very significant the more credit limit you have, and you have way more space to purchase things without necessarily affecting your credit score. Now, length of credit history, this is the 15% category. Now, this one is gonna be hard to actually help your score in the first 5 years, but you wanna make sure you're always setting yourself up since day one. So the first credit card that you apply for, you wanna keep always and never cancel it. The reason why is FICO looks at how old your accounts are and it averages the age of your accounts. For example, Discover card is your first card. If you hold that card for 5 years, that could be your oldest account. And then every time you apply for new credit cards, that number is gonna obviously get newer and newer and newer. And you don't want to be in a position where you're applying for so many cards, the average age of all your accounts is like a year or 2 years. So that will lower your score. So just keep in mind, you always wanna keep credit cards, even if you're not using them, especially if they have no annual fee. If they have an annual fee, especially if it's a significant amount and you don't use them anymore, obviously cancel or demote those cards to non-annual fee cards so you can keep the age of the account. But remember, this one's only 15%, so it's not as significant as the other two I mentioned. But remember, always try and keep the average age of your credit card account as old as possible. Now, new credit and inquiries, 10%. So anytime you apply for a credit card or submit an inquiry, whether you get accepted or not, it's gonna go 5 or 10 points down. Remember, always apply for a credit card every 3 to 6 months. And if you are applying for a credit card, make sure you get pre-approved so you don't get a hard inquiry if you get accepted or not. If you're applying every 3 to 6 months for credit cards, you usually won't have too much of an issue damaging your credit score. Credit diversity or credit mix is going to be another 10%. Now, this can be explained a couple of ways. Each credit card bureau or bank is technically a different lender. If you just, for example, are using Chase, then you only have one realm of diversification, which could be bad for your credit score. But if you have Capital One, you have Chase, you have Built, and you have a car loan, for example, that's 4 or 5 different lenders, so that would increase your credit score. The amount of lenders you have and the diversification technically matters to your credit score, but obviously never take out a loan or get a new credit card with a different bureau or different bank unless you actually see a benefit in doing so and you're going to stick to your natural spending habits. Don't just go out and buy a car so you have an extra, category. That would be stupid, right? So if you're absolutely brand spanking new to the credit card game and you have no credit card, you have no credit score, you're on a thin file and FICO has no idea what your score is, there's 3 kind of things that you can do in any order or any possibility. You don't have to do all 3 of them that can potentially get your score in order, and then you can start applying for better credit cards in the future. So the first one is you can be an authorized user under somebody else, like a family member. For example, if your dad has a really good credit score and he has the Amex Gold or he has a Venture X, you can be added as an authorized user and actually get a lot of his credit history added to you. Now, obviously you don't want to do that if you know somebody who has a bad credit score or a bad credit history. The second thing you could do is get a starter card. There's many secured credit cards that require a deposit to be put in before you apply for them. Discover, Chase, and Capital One are usually the big 3 that I would suggest to do for starter cards. You can go on Cardocrat.com and go to the new to credit section under the browse cards page and you can see your options. And the third thing you can potentially do is get a loan, like buying a car. I personally don't like taking out loans on depreciating assets. It's a pet peeve of mine, but don't get a 10-year finance, but get a small loan potentially to show the bureaus and the bank that you are responsible at paying it back. So if you're very consistent and you do everything right and everything that I've laid out today, your credit score will go up pretty fast. Within 6 months to a year, you should have 600 plus, close to 700 credit score, which once you tap into the 700s, you can get accepted to pretty much any credit card out there. And you can very easily increase your credit limit because you'll be accepted more often and the banks will trust you more. But I love to reiterate this a million times over because this is the most important thing. When using credit cards and when spending in general, never veer outside of your natural spending habits and necessity. New people to credit are going to have very low credit limits, so be wary of your credit utilization. I think that's definitely a tip that I would give out because if you apply for your first credit card, you might not even have $2,000 on the credit limit. This means you cannot spend more than $100 without getting over 5% in utilization. Remember, you don't want to be over 5 to 10%. Use that credit card very sparingly for very small purchases until your credit limit can go up. That means maybe a restaurant purchase, subscription to a streaming service, buying groceries, but not for your whole family, of course. You're buying a couple things there, 10, 20 bucks. Remember the percentages, remember how much credit limit you have and how much you're utilizing. And once your credit increases, go on Cardocrat.com and start shopping around for the best credit cards that can give you the best benefits for your lifestyle, your spending habits, and maximize those welcome bonuses that each card offers. So good luck out there, anybody trying to build their credit. Stay tuned for the next one, subscribe, and I'll see you soon.